Well, let's get to our first guest on the show, then Lyn Alden, founder of Lyn Alden Investment Strategy, is with us. Lyn, great to have you in. And the starting point remains the same, right? What's happening with the tech trade in the US? Because every now and then we get some shakeouts in the market and the so-called circular deals. There's no end to them as well. We just had another one announced yesterday. What's your sense? Are you still buying US tech stocks?
Thanks for having me. I think we're finally getting to the point where the AI trade and the overall U.S. tech trade is getting long in the tooth. I think that the market is starting to price in some realistic concerns with them, mainly the serious capex that they're going to have to do and kind of the valuation adjustment around that. There's also, of course, been some disruption. The market's realizing that NVIDIA might not be the only game in town. Google's chips are showing promise, of course, with some ability to sell outside of their own company. My view for a while is that Alphabet, Google, has been kind of the laggard to buy, but I view that trade as largely done now after their recent run, and so I'm actually pretty concerned around tech stocks. Not that I expect some major crash or anything like that, but I think that they are set to probably have a weaker 2026 than they have here in 2025.
Does that mean anything significant with respect to change in asset allocation? I mean, where does the money move then? Do you see it coming to, some of the underperforming markets like India?
I think it's possible. I think that, so my view for most of this year was that I liked some of the other emerging markets, like Latin America, for example. India has been a laggard this year. I am somewhat more optimistic about India next year going forward. Of course, I still think the structural headwinds are there. It's just mostly been a valuation concern. And of course, the markets that benefit from a weaker dollar have done pretty well this year, whereas India is less associated with the dollar as directly. So I think 2026 is probably going to be a better year for the Indian stock market. More broadly, I think that there is still value in some parts of the U.S. market outside of tech. I'm less bearish on financials in the U.S. than many others are, for example, despite slowing economic concerns. So there are pockets of interest. But the sheer market cap of the U.S. tech play is, I think, is likely to weigh down the indices next year.
Okay, all right. Hi, Lyn. Good morning. Good to see you, Ben. You're seeing some weakness on the yen, out there. And I was looking overnight, the probability of the Bank of Japan going ahead and hiking rates, that's gone up, actually. Do you think that could spook global equities because of the yen carry trade? And what are you factoring in terms of central bank action, both from the Fed as well as the Bank of Japan?
Yeah, so lately we've actually had unusual volatility around both the Fed and the Bank of Japan. So the probability of a Fed cut or pausing has been whipsawed in recent weeks. And then we've seen recently the same thing out of the Bank of Japan, which is that markets were kind of caught unaware at how hawkish the BOJ might be. We've, of course, seen sharply rising yields in Japan on the longer end of the bond curve. And as you pointed out, a weaker yen. I do think that the Bank of Japan is going to get slightly more hawkish here. The issue, of course, is that they're in fiscal dominance, meaning that they have very high public debt to GDP. They have pretty sizable structural deficits. And so interest rate hikes don't necessarily contain the yen fall as much as it would otherwise, because it actually contributes to blowing out the deficit. One of the big things that is kind of always in their back pocket is that they can sell U.S. Treasuries. They've got substantial reserves. So we could see more rounds of that in the future whenever it gets any sort of disorderly. But I do think actually right now some of the biggest issues that's hitting broad markets, probably especially the Bitcoin and crypto markets, because they're kind of more liquidity sensitive, this kind of thing, is some of the issues for both the Fed and the Bank of Japan. Here, of course, in the U.S., we've had some repo activity issues. So we've had kind of a spike in secured financing rates. We've seen some usage of the Fed's standing repo facility. They've, of course, ended quantitative tightening, but they probably still have more liquidity provision to do to fully put out those fires. So I think the combination of that kind of tight U.S. domestic liquidity, as well as some of the hawkishness, the falling yen, the rising yields in Japan, are probably both contributing to some of the weakness we've seen in certain parts of the global market.
Okay. All right, Lyn, we'll leave it there for this morning. Thank you so much for joining in. Good to get that perspective from you today. Thank you very much.
Thank you.